You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that music means it is time once again for the old OB, the old Option Block, your bi-weekly source for all things fun and exciting and interesting and informative in the world of options. My name is Mark Longo from the aforementioned brand new TheOptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A lot of stuff going on in the world of options. And joining me to help me get to it, first off, holding down the Fidelity hot seat, it is the return of the last emperor, Mr. Constantine Varandopoulou, from the trading strategy desk over there at Fidelity. Mr. Last Emperor, welcome back to the program. You know, all the other guys over there, they're all jealous. They're all mad at me now, Constantine, because you have the sweet nickname. But yours kind of came packaged with the name. It kind of just came to me.
I appreciate the warm welcome. It's always a pleasure to be back. It seems like it's been a little while, so I'm happy to be back. And a lot of interesting things going on in the marketplace, so lots to talk about today.
You'll know it has reached saturation point when people start calling up the desk asking for the last emperor. That's when you know it has truly reached critical mass. At least Trey at least doesn't have to be jealous because he comes with his own nickname as well, so he can't really be jealous. But the rest are now taking umbrage with me that they don't have cool nicknames. But hey, the inspiration has to strike, and I cannot dictate when that happens. Also joining me, it took a while for him to get a sweet nickname, Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, how long was it before you were branded with the Uncle Mike moniker, sir?
Well, I was the man from the mountains for a while.
That's true. That's true. I forgot about that.
It's probably about a year, I would say, maybe.
I totally forgot about that. You're right. The deep, dark history of the Option Block. Go back into the feed, listeners. Check out the early shows from like the 2010 area if you want to check that out for yourself. The boys from the Option Pit, I believe, are out there scrambling to get their event planning final steps in order. So we'll see if we can wrangle one of them for the show in a little bit. Meanwhile, though, we got to keep rolling. It is time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the block of trading, a.k.a. the trading block, a.k.a. what the heck is lighting it up in the old markets today. And, we're coming hot off the heels of an interesting, shall we say, couple of days in the old marketplace. Of course, this was a truncated trading week. No show on Monday, of course, because the markets were closed. But we're back at you here on Thursday, coming off the heels yesterday of yet another big sell-off. We're locked in this dance, this ever deadly tango of trade war. Will they, won't they? Yes, no, up, down, dog, cats living together, mass hysteria every day. It's good news in the trade war. It's bad news, and the markets are moving up and down as a result. Yesterday was obviously a down day. Most of the major indices in the 1%, if not more, range, at least for a good part of the session there. We saw vol spiking as a result of VIX cash getting up there, threatening the 19 handle, getting up to around 18.5 or so, I believe. Today, we're seeing a little bit of a mitigation of that. Most of the major indices up about 1/3% or so. So green back on the screen, at least for the time being. Calmer, cooler, saner heads are prevailing out there. We haven't had the next round of instigating tweets to really drive things home and escalate trade war tensions even further. And of course, with a little bit of green on the screen, with the sell-off mitigating, at least for the time being, VIX cash being mitigated a bit as well, off to about 17.25, so off about 3/4 of a point, right about from where we closed yesterday, and obviously off more than a point from yesterday's intraday high of around 18.5 or so. So a lot to unpack. But as you mentioned, Mr. Last Emperor, it's been a while since you've joined us on the program. So maybe we'll start in your neck of the woods. Clearly, this has probably been I'm going to go out on a limb and say it's been a pretty busy week for you guys on the strategy desk. First, walk us through that. What's it been like, holding people's hands through these tumultuous markets? And then B, what is lighting up the Fidelity tape these days, sir?
Yeah, it definitely has been a busy week for us. During market sell-offs, generally speaking, we do have a pickup in volume from our active trader clients. The idea is, I guess, is to make sure that you always have a plan regardless of what the market is doing. And we've been working really hard in kind of building a platform for people to have a good, thorough understanding what their risk-reward ratios look like, before they place the trade. So a lot of it has been conversations of, hey, I believe that you guys have been telling me so. Now it's happening. I see how it's playing out. These are the steps that I'm going to be taking. So a lot of it is not really, oh my God, what do I do? But rather, just follow on conversations of what we've had before in the light of how rough the month of May has been so far. In terms of what's lighting up the tape today, Fidelity customers are pretty active. As you mentioned, obviously, the market was down substantially yesterday, or at least felt that way at some points of the day. But we did rally into the close, and today we have a little bit of a follow through. I do believe that the Dow went negative there for a moment. The S&Ps never gave all of the gains up. And we're up slightly right now. So far, so good. Fidelity customers are trading Beyond Meat, BYND, the good old BYND that I know that you guys have talked about before, is claiming the leaderboard here, number one in terms of orders by Fidelity customers on the equity side of things. 57% buys, 43% sells so far. That stock, what an interesting stock that one has been since it went public. I think the IPO price was $25, which was at the top of the range. Opened up at $46 and basically never looked back. It's forming this nice uptrend. I mean, by technical definition, this is a pure definition of an uptrend. Higher highs, higher lows. Granted, we don't have a whole lot of data to work with here, but so far so good. Implied volatility in this name is fairly high. I think probably one of the highest ones that I've seen in a while. So, what does that mean for options traders? We just have to remember that essentially market participants are telling you that the expectation for movement is high. So in premium terms, that means that options are expensive. There are a lot of trades that are going through. Obviously, today total volume between calls and puts is around 93,000 contracts. I think it averages over the past time that it has been trading around 41,000 a day. So it's double the average, and we still have a few hours to go. There's a lot of activity on Friday's expiration today that I'm seeing. I'm seeing the fact that the 100s are very active, and it looks like maybe traders out there are basically using options to scalp the stock's movement. I know that pre-market it was as high as 106 or so, and the low in the day was sub 95. So yeah, that's a very interesting one. From the Fidelity side, I want to say that it is a hard to borrow stock, right? Everyone knows that. The float is very small. It's only 58 million shares or so, which makes it, sub billion-dollar company. And the hard to borrow rate right now on an annualized basis, at least if you can find shares through Fidelity, it's around 57.5%. So what that does is creates a rather unusual put skew, especially the further out you go on the option chain. If you start looking out in July and later in those expirations, the put skew, or in other words, the puts are a lot more expensive than calls. It makes sense if you can short the stock and you were thinking about creating a synthetic short of some sort, you have to pay up for it. The next one I wanted to mention was the one that doesn't often come up on the list, this Palo Alto Network, symbol PANW. That one is down today after it reported earnings last night. Beat the earnings expectations, but announced a couple of new acquisitions, and it looks like the company management mentioned the fact that these acquisitions will most likely slow down things in the coming quarters. And this morning you had a slew of not necessarily downgrades, but price cuts to the 12-month price targets by a lot of analysts. So the stock is down right now about 6.3%, trading right around that 200 level, 201.84 right at this moment. It's interesting. The stock has been, under some pressure, especially if you look back to the all-time high that it made on its previous earnings announcement on the 26th of February. It was trading at 236. Never really went back up there to test it. So, give or take a $40 drawdown from the previous earnings announcement. So it's been under some pressure. That one is interesting in the options world, right? So if we think about the expected move, I was watching this one into the close. It closed at 215.32 yesterday, and the straddle for this Friday was pricing in 15.95. It's currently down 13.6, and we still got a few hours today as well as Friday to go. So far, I guess it's testing the limits of the that give or take one standard deviation bottom level based on what the straddle was pricing in. But we still got a little bit of time, so we'll have to wait and see what happens. A big move to the downside, implied vol at least 30, 60, and 90 days collapsing as everyone would expect, but the price action is carrying the stock a lot lower. The third one and the final one that I'm going to mention, which also doesn't really usually make the list, is NIO Incorporated, NIO. That one is the Chinese electric car manufacturer. Actually reported earnings, I believe, on Tuesday evening. Mentioned that they were going to be facing some challenging and uncertain times in the near future, and the stock took a hit. Yesterday it was down about 6.7%. Today down another 9% or so. Obviously, the stock is kind of an option in itself, trading at $3.25. But surprisingly to me, and I'm not sure about you guys, but the options markets in a stock that's this low priced are still very active. So 90-day average volume is close to 100,000. They traded 144,000 contracts so far, and there's a lot of downside, put paper out there, right? The one strike puts, traded 6,200 times. I saw that was through the offer, and just before the show started, I saw 24,000 contracts of the three strike puts go through in the buy right form. So that would be, shorting the stock and shorting the puts most likely. So that's quite interesting as a strategy in and of itself. But that's about it. That wraps up the most interesting three that we found on the list here today.
Who would have thought meat substitutes would be so interesting? What did you say it was? 57.5% the annualized rate to short it out there right now at Fidelity?
That's right. Mm-hmm.
That's a pretty impressive chunk of change to get yourself some short shares of BYND. Have at it, listeners, if you are indeed so inclined to short it. Looking at what's lighting up the options out here, pretty decent volume overall. The OI and BYND right now. Remember, it is optionable. The stock's been moving like an option, but there are options on it too. 148,000 is the OI right now. Actually biased to the puts, about 80,000 to the puts. Again, that kind of reflects what we were just talking about, 67,000 to the calls. The big position actually are about 5,700 of the June par calls. June par calls, then the June 90s, and then June 50 puts, maybe a bit of a relic from around that IPO level. I think it came out around 60 some odd, somewhere in that range. So interesting stuff. A lot going on in the world, apparently, of faux meat. Nothing faux about Uncle Mike, though, sir. Uncle Mike, sir, what is catching your eye out there in these topsy-turvy markets? Easy for me to say. Yet again, sir.
Well, I think that right now, I talked about a little bit on the show last week. It looks to me like we are kind of in like a magnet-style market to the 2,800 level. Excuse me. So in that we're a little bit below the 2,800 level right now with the SPX, but we've really stayed close to it a lot over the course of the last year or so, whether we've been above or below. It seems like we keep coming back to that type of a level. So definitely noticing that. In terms of technology getting beat up a little bit, noticing that as well. And of course, I think just the big story right now is the trade war with China, what's going on with that, where we're going to go with that. Is that going to be resolved? But one thing that I keep telling people is that we're in the third year of a presidential term. And I really believe that a pro-business president going into campaign season, which will be starting actually sooner than we all think, he doesn't want to have, in 2019, the market was down. He doesn't want to have that going on his record when we hit the campaign trail next year in 2020. So ultimately, I do really believe that we're going to have some upside in this marketplace over the course of towards the end of the year. Right now, we're pulling back a little bit. We've had quite the bull run at the SPX started the year off at roughly 2,500. It's up over 10% on the year. And so that's pretty good for late May, of course. Granted, we did have a big downturn in late December last year to kind of account for things. But with that being said, so far this year, we're not doing that badly. Whenever we do have a run-up like we have had over the course of the last few months, there's going to be some pullbacks. And so ultimately, I think we're at a key point in that if we stay around the 280 level SPY, 2,800 SPX, that'll give us a lot of clarity going into the fall. Oftentimes, excuse me. Oftentimes, when we do have the third year of a presidential term, policies are dictated in such ways to where presidents don't like having down markets. So I'm bullish going into the end of this year. The other thing that I'm looking at right now is that I'm probably leaning more towards being a premium seller at this point in my option strategies. Meaning I'm selling put spreads as opposed to buying calls a little bit more. I'm doing both still, but I think that with volatility at a higher stage, right now. I think it makes more sense to be more of a premium seller. However, I will say this, make sure you have your risk management in place, as with anything. It's a different style of risk management. If you're just buying an out-of-the-money call when the VIX is at 9, you just buy an out-of-the-money call, a couple dollars out of the money, and, well, who cares if you lose everything because it's such a small amount of money. Assuming you didn't put everything into it, which is what the case, I hope. But right now it does take a little bit more money to sell a spread, sell a short put, something along those lines. So make sure you have your risk management in place. And typically I like to tell people, don't let short put spreads go in the money. And my 2 rules of short spreads, short verticals: rule number 1, don't let them go in the money. Rule number 2, don't forget rule number 1. And I think that's very important in a market like this.
I do believe we are also joined now, better late than never, by the greasiest of Meatball, Mr. Mark Sebastian. Mr. Meatball, how go things? What is lighting up the pit chat crazies today, sir?
Yeah, I think the interesting piece is that every time there's a piece of China news, we react less and less and less, especially in the volatility space. Yesterday, really odd behavior, right? And Mark, I know you noticed this. Like, we're down 34 points, and VIX futures are like, meh. VIX is like, meh. Whole market's like, meh.
A resounding meh, as I like to say.
Yeah, and most of the paper I was seeing was people either selling their hedges or positioning to be short. It was really odd, and I think you're looking at a market that is kind of getting tired and sick and bored of the whole McDonald's themed trade, and maybe moving on to, who knows, earnings, whatever. But, I feel like there's real potential for us to catch a little bit of a bid here. I think we're going to make a run at 2,800 here. And, who knows where VIX could go. I know if we get back to the highs of the day, you're going to see a sub 16 VIX, because they really do not want to own premium right now.
Yeah, it's kind of, we were talking about this on our advisor show yesterday too, kind of just the general muted reaction going forward to this trade war news. It's kind of understandable. It is human nature. We discussed this before. Someone slaps you in the face for the first time. You're like, oh my God, what the heck? And your face is red and you're outraged. Then it happens maybe a second or a third time. You're going to be outraged, but perhaps less so. You're more adjusted to it, shall we say? And that's what's going on with the marketplace. We're seeing these shocks, these successive shocks to the market there, and every time they happen, they're a little bit more muted, unless we do see some sort of crazy, outrageous thing to light things on fire again. But either way, that's kind of what we've been seeing out here. Speaking of lighting things on fire, it hasn't been exactly a light them on fire type of day out there in the broad markets. Coming into showtime, we had VIX doing a little bit shy of 200,000 contracts. The ADV is a little bit north of 700,000 right now, so a pretty light day. VIX not exactly lighting them up. SPY, same deal. ADV's right around 3 million. Coming into showtime, they did about 1.25 million so far. SPX, they push about 1.4 million contracts a day. Today, a little over 500,000 on the tape. The Qs, they come in around 800,000 for the ADV, a little over 300,000 on the tape today. And pretty much IWM, all par for the course. ADV right around 300,000, doing about $1.20 or so. So not a lot lighting it up. But speaking of what a weird day it is, usually our top 10 most actives out there in the equity options land, it's dominated by names you've mostly heard of. Today, not so much. Number 10 you probably have, because we were just talking about it. Beyond Meats, coming into showtime, they had about 72,000 contracts on the tape. That was only 1,000 less than Amazon, with 73,000 for number 9. Number 8 is Snap with 87,000. Then number 7, U.S. Steel, hasn't been on the tape in a while. Number 7, 89,000. Number 6, talk about weird little names, NIO. This is an ADR out of China, ticker symbol NIO, appropriately enough, NIO, with 108,000 contracts on the tape. Number, what do we got? 5 here. AMD, $1.33. Number 4, good old Tesla, $1.38. Number 3, Bank of America, with $1.53 on the tape. Number 2, another weird one, Johnson Controls International. They had 153,000 contracts on the tape coming into showtime. This one rang a little bit weird to me because it's not a name I'm very familiar with, and let alone pushing down names like Tesla and AMD and Bank of America and threatening Apple. That's a weird one. So I had a feeling maybe something was up, and I went and dug into this one right as the show started, and it looks like, sure enough, there's a lot of conversion reversals going up out there on the June 45 strike. So that's what's lighting up all this tape, 20,000, 14,000, 10,000. So they're doing some stock swap and stock replacement out there, which is why those numbers are so artificially high. But still an interesting one, JCI, not one that's been on our tape before. Perhaps it merits further attention. Trading today right around $38.76, up about half a buck or so. And the number one spot, I kind of gave it away, Apple, just around 200,000 contracts on the tape. Let's look for some biases out here really quickly before we roll. Snap, actually, at the number 8 spot, has the most biased paper with about 80% coming on the call side, only 20% on the put. So folks liking some upside action, at least from an options perspective out there in good old Snap. We do have some earnings popping off after the bell. We'll get to all those in a bit, but it still is a big week for earnings. Meanwhile, though, let's keep on rolling. Let's go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get whimsical, we get wild here. You like small names, we're gonna keep you happy on today's Odd Block, keeping the tradition alive here of weirdo names. First off, we got a name, ticker symbol FOLD. You see that? You know it's probably a biotech, and it is. This is Amicus Therapeutics, a biotech out of Cranberry, New Jersey, the mecca for all things biotech, of course. Coming into showtime, they are trading 1070, off about $1.50. So not a good day here, off about 12%. Not a good day here for Amicus Therapeutics. Go figure, biotech showing a little bit of movement. It's kind of what they do. A year ago, they were trading about 17 even. So well north of where they are right now. Then like the rest of the market, they reached their nadir there, the doldrums there, right around Christmas Eve. Actually, this one was a couple days earlier on the 21st, not exactly on Christmas Eve. They hit 838, that was their low, at least on that day. And then they kind of rebounded right off it like the rest of the market. Went right back up to 1230, so pretty much a four-handle run, roughly 50% run over the course of about a month here. So a good pop for Fold. And then they continued to rally for a while there, got up to, about 1430, another $2 by early April. So things were looking good, and then they kind of have been on the downswing ever since, getting to today, 1066 out there. So an interesting little saga in this biotech name. Let's see what our Eye of Sauron picked up on the options tape here today. I'm going to go out on a limb and just guess. Maybe it's probably on the puts. Let's see. Oh, yes, I am correct. They are the July 11 puts, but maybe not going up perhaps the way you would think, given all this hither and yon here in the stock. It's 5,000 of the July 11 puts going up for 77.5 cents. These things were about 20 cents wide. When it went up, they were 75 cents at 95. So someone coming up right off the bid to open up for 5,000 over there on the Philly, doing it again for 2.5 cents off the bid. Opening does have the whiff of some, as the Rock Lobster would say, some line in the sand puts. Let's see, the 11 strike getting 77.5. So yeah, that's a little bit south of where we are right now. You're talking about 40 odd cents south of where we are right now. Obviously the 11 strike in the money. Maybe they did this before the big sell-off, or maybe as a result. I don't know. Either way, maybe they weren't thinking these puts are going to be as aggressively in the money as they already are. So good chance that line may be crossed, as it indeed already is. But they got some time. They've got till July expiration. Mr. Meatball, are you in agreement, A, that these are line in the sand puts, or you think maybe something else is afoot? And then B, what do you think about putting on these puts that are almost immediately that line is crossed, sir? Does that change your opinion of the trade at all?
Maybe it's somebody that's actually trying to take delivery. You never know. It's an interesting trade, but yeah, I think it probably is. It could be like a stock replacement thing, looking to make some income, but it's definitely it's definitely unique. And $11 stocks, they always stay well above $11. That never causes a problem or anything like that. So I think I don't know that I love the trade, but I understand it.
Yeah, I mean, it's not exactly a fun. Are you an in the money put seller? Is that a way you like to go ever?
No.
I mean, I guess if you really want the underlying, but outside of that,
yeah, no. I mean, I generally speaking, I'm more of an out of the money put seller than an in the money put seller or an at the money. If you're going to sell puts, go where there's the most premium. And so, what I'd rather do is sell like an out of the money put and buy an out of the money call and risk reversal it than and taking a credit than do what this guy is doing. That's just not my that's not my bag. Not my cup of tea.
Not your bag, indeed. I had a feeling that was not your bag, but you never know. Maybe you changed since the last time I talked to you, and all of a sudden you like blasting away at deep in the money puts. You never know. Crazier things have happened. Let's see if our next name can continue to contribute to the crazy. Next up here, I love these little live odd blocks where we're kind of seeing them for the first time and sinking our teeth into them with you guys, the listeners. It makes it kind of fun. It's like live theater. All right, so next up we've got, what do we got here? Steel Dynamics, Inc. Ticker symbol STLD, STLD. Another newcomer here on the odd block. This is a steel producer based in Fort Wayne, Indiana. In case you're curious, they have a production capacity of 11.35 million tons. There you go. Put that in your trivia book for the day here. Let's look back at today trading 25.80, off about $1 or a little over 3%. A year ago, they were looking a lot better. They were trading about $50 actually. $50 back in late May of last year, and then they rallied all the way up to, let's see, 50. About 51 was their high. So a year ago they were right about at their high. And then it was kind of a long, slow slide ever since then down. They hit their nadir also right around Christmas Eve of 29.5, at least for last year. Then they rebounded again up to about 39. So 10-handle rally, right about a third or so of a move up early February or mid-February. They hit that level. And then they kind of started selling off again, right back down to where they are right now, right about 25, 26 out there. So it's been an interesting saga, up and down, give and take yet again here, this time in Steel Dynamics. Let's see what our Eye of Sauron delivered for us out here. Once again, it's put action. Once again, it's 5,000 contracts. That seems to be our trade du jour today. This time it was in the June puts, the June 26s. Once again, at the money, slightly in the money puts. So I'm seeing a trend here. Going up, let's see, these things when they went up were 70 cents at 80, so fairly tight for a relatively illiquid name. I'll take a dime. That's not too bad. They went up for 79.9 cents. So their broker said, I'm going to get you a little bit better than the offer. There you go. Are you happy? So there you go. They do a little bit of a price improvement, a fraction of a cent, and I guess the customer is happy. So buying them right off the offer of a fraction of a cent off of the offer. These are opening over there on the Philly. Philly leading the dance out here today, all this action. The earnings are on the 22nd of July, so this is not an earnings play. This is just straight up someone coming in and looks like gobbling themselves up some opening at the money puts that go out in less than a month. Mr. Meatball, you didn't like the last one selling those puts. I'm guessing, I'll go out on a limb and going to guess you maybe like these even less. Gobbling up puts for 80 cents with about 3 weeks and change to go. Is this high on your savvy scale, sir?
There's usually better ways to express that opinion, unless this is a person that has here's the thing, right? So if they have some sort of smart knowledge about this, buying these makes them suspect, and and they need that kind of move. I don't know. People do the darndest things. Kids say the darndest things, folks.
They do indeed. Oh, the beloved Bill Cosby oeuvre. Oh, how we miss it. Jello pudding pops, all that good stuff. Instead, let's keep rolling. Who knew he'd be so divisive? What a crazy thing for all kids who grew up in the 80s that Bill Cosby is now such a divisive and indeed loathed figure. Craziness. All right, let's keep rolling into our final name here. Let's see. Less controversial, certainly, than that. We've got, what do we got? We've got Honeywell. Honeywell International. So this one's not a newcomer. Actually, this is a review of something we highlighted first back a little over a month ago, April 18th, so about a month and a half ago. We talked about someone coming in. Looks like at the time they were scooping through the offer, a little bit of call love out there in Honeywell to the tune of 3,000 of the May 175 calls going up for, let's see, they were offered at 34 cents. This person pretty much gobbled them up for about 35. So about a penny through the offer. These were opening. This was a post-earnings trade. Earnings had happened not too long before that. Total volume on the day was actually a lot more, up to about 12,000. The OI coming in was only 47. So this was all open in paper all day long, about 12,000 contracts. We thought we'd mark these down to keep an eye on these, see how they fared. They were May, obviously, so they've gone out now. Let's go back and look. The stock closed that day on the 18th, right around 169. So these calls about $6 out of the money. And this guy seemed like he was on the right tip. The stock kind of took off right after he did this trade. It rallied from about 169 up to 172 immediately after, like a couple days after it was traded from 172. It hit a high in the subsequent weeks of about 174 and a third or so. So it got up there threatening that 175 level. So if it was indeed size, open, and call love, and it did it indeed, at least that block was. The rest of the paper, I don't know, but we highlighted that block in particular. Looks like this guy hit it out of the park. It did pretty well. Because what do you want when you're buying premium, right? You want it to aggressively move toward that strike, and it seems like it did fairly aggressively in that case. And then digging in, courtesy of our friend the Flow Master and all of his great search tools there at Trade Alert, it looks like most of these were closed out right immediately prior to expiration, with the possible exception, ironically, of our 3,000. I'll look in here at the flow history of this contract. Over 13,700 traded on the 18th, so a lot went up that day. And the OI, there was a little bit of back and forth on some of them, obviously, but total OI up to about 10,000 after that printing of that day. And that was the biggest day in this contract's life. And then beyond that, we saw some other days trading, decent. The OI got up to around 10,000 and stayed around 10,000 for a while. And then by May 1st, so a couple weeks later, it was down to about 6,000. So roughly 3,000 had closed out. By the 3rd of May, it was down to about 4,000. So a couple thousand more had closed out. By the 6th, it was down to around 3,000, which is pretty much where the OI went out. Going out on the expiration of May, there were about 3,300 of these 175 calls still open. So we never breached that 175 level, so they went out worthless. But there was at least many opportunities to, at the very least, scratch. I didn't dig into the prices for sure. Let's look here. On the 23rd, they were trading $1.38. So they were trading $1.45 on the 3rd of May. So they had many opportunities to take some money off the table. On the 30th, they were trading over $2, $2.07. So this guy, hopefully, or gal, whoever it was, had many opportunities. I am a little concerned that it went out with 3,000 open. I'm hoping our friend here didn't miss the boat. It is possible, but so many went up that day. It looks like somebody had to hit it out of the park with some of these. I'm going to go out on a limb, Mr. Meatball, and say this guy did all right. Do you concur, or do you think he was the last 3,000 holding the bag on expiration?
I'm going to guess that he did all right. That's going to be my guess.
Let's be charitable. Why not? Let's assume.
Good job, you.
Well done, you. Even though there were almost exactly this many still open at expiration, which we've been doing this long enough to know maybe he left some money on the table. But we shall see. Speaking of leaving things on the table, we're not going to leave your questions on the table this week. It's Thursday. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's kick things off. We got a lot of questions here, but of course, I always like to love our live folks as well. Good incentive listeners. I know lots of you like to listen after the fact, but if you can make it and join us live, you want to ask some questions, you can have at it, including our old friend here, Mr. Mark Brant. He's in the chat again, sending us a bunch of questions. He wants to know about GLD double calendars, about VXX upside risk reversals. But let's go with this one, which is more straightforward. He just wants to know, quite frankly, Mr. Meatball, what are you trading right now? That's what he wants to know.
He wants to know what I'm trading?
What you are trading in your personal accounts. No, I'm just kidding.
I'm trading
for Carmen Line.
SPX, VIX, VXX. I'll tell you a trade that I like.
I think he wants maybe some positions too, maybe not just what products.
No, I know. Here's a trade I kind of liked yesterday that we kind of talked about in chat. I looked at the June 2025 30 call fly. That was about 40 cents yesterday. Today it is, let me see. Today it's about 30, call it 35, so it's off a nickel, versus the 15 put for 30 or the 16 put for 60. The 16 put worked a little better. And, today it's 70-75. And just kind of a play and 1-to-1-to-1. Just a play on yesterday felt real heavy. So I was looking for a way to kind of fade volatility while also not losing my shirt if we tanked. And so kind of $1.10 for that bearish package was kind of a trade that I set up. Was also looking at AMD. That stock looked really hot the other day. Was kind of playing with some like a bullish July butterfly. What was I looking at? I was looking at the 29, 33, 37 butterfly, just as like a bull bet. That was one that I kind of liked as well. That was for, I was looking at, I think it was about 50 cents. The volatility's come off some in that name. It's expanded. So those are just a couple. And then Apple, I've been building leap positions to try and take advantage of this kind of silliness in the price action. I also like some short-dated put spreads.
There you go. A little bit of an overview. That's going to be a segment. What is the Meatball trading? I have a little bit of music, and it could be fun. Some silly music, a.k.a. the old Russell's weekly rundown, the much missed.
Yeah, we missed that. I like that. Well, we also missed our, we do the stock of the day on Mondays, and we missed Monday because Memorial Day.
Monday.
So.
Yeah, so yes, we'll need some silly music for the Meatball. Let's see. Karis Valo chiming in saying Tesla is Enron on wheels. Well, you're certainly not alone in that opinion, Karis. We talked about the analyst last week who put their worst case around $10, obviously to get some ink, and it worked. But still, the options certainly are perhaps agreeing with you. Right now, coming into showtime, the biggest open position in Tesla remains these June 50 puts, 50 puts in June. So not Jan 2021, nothing like that. June 50 puts, about 71,000. That's the best part. They continue to grow in open interest every time we talk about them, which is fascinating because, they're so short term. And yet they continue to dominate the charts. And the number 2 are the the Jan 50 puts. Number 3, the Jan par puts. Number 4, the Jan 10 puts. And number 5, the June par puts. Those obviously have a little bit better chance of coming to fruition. Let's see, where is the madness that is Tesla? Today it's at 188, almost 189, off about $1 or about 0.5%. So, yeah, the options OI, at least from a net perspective, is perhaps agreeing with you that they are. I don't know. I think June. I've said before. I think June may be a bridge too far. But hey, who am I to judge such action out there? All right, let's see here. A bunch to choose from here. All sorts of fun questions. Ali, a deceptively simple. Actually, no. Let's get away from this one for a second because this next one from Con9. We can go back to Ali in a minute. Con9. This kind of gets on what you were talking about earlier. Con9 wants to know: is there such a thing as a stock being too cheap to trade options on it? This is a constant source of debate, conversation in the space. We used to have the Viceroy on the show, and he was not a fan of certainly anything below $5. And probably if you told him you're trading options on a stock below $10, he would probably look at you a little bit askance. At that point, he's like, the stock is an option. What are you doing? But again, cheap names. NEO. I was just talking about NEO. NEO, I believe, is around $3. Let me see, and that's in the top 10. Yeah, 3.25. And that's in our top 10 most active options today. So clearly, people are lighting up options. We had unusual activity last week. The stock was, I think, around that level, a couple of bucks. So, I'm personally not a fan, really. When they get that cheap, you got the stock. But clearly, there are people out there who are doing that. Last Emperor, you were just talking about this earlier. Cheapy names were lighting up the tape over there in Fidelity. So do you have a line in the sand at which you will not cross? Is it like $5, or are you a fan of maybe taking a flyer even on cheap names like this?
Yeah, I think I think the $5 rule actually stems from more of the kind of the institutional side of things, right? A lot of institutional investors, money managers, just cannot participate or buy or own, right, stocks that are non-marginable in a lot of situations. So sub $5 rule, I think, kind of stems from that. But yeah, I mean, this is strange. I mean, it surprised me. I'll be honest with you. I know that the stock has been very volatile over the past year. I mean, I saw the stock, as high as like 10.50, and now it's trading at 3.25. So needless to say, it lost 70% of its value. So if you were trading options, I guess, on this name, and you did catch the top at $10, and you were writing it down all the way using options, you probably did all right, I would imagine. But from the shorting of the stock perspective, if you did want to short this, right? I mean, you can only make $3, and you have unlimited risk to the upside, right? So maybe some of these players that have been making money all this time are still using options in order to minimize upside, risk exposure.
Uncle Mike, same question for you. I remember we used to debate this a lot when the Viceroy was on. We haven't done it in a little while, so maybe it's good to have a little bit of a refresher on this. We remind our audience, where do you stand on the contentious issue of options on cheap stocks? And as well as our listener here, what was the name? Con9.
Well, I don't even trade cheap stocks, so I think they're too cheap. If they're under $10, I typically don't trade them at all. So with that in mind, I don't think it would make any sense for me to do anything with options on stocks like that. But no, I think that, excuse me, on the futures side of it, let's say that you wanted to trade something on like natural gas or something like that. Options are priced in such a way, and the size of the contract is priced in such a way to where a movement can make it worth your while to do so. The problem with the low-priced stocks is that oftentimes the options are rather illiquid, and the bid-ask spread, which automatically works against you when trading any option, is going to exist that many more times because you have to buy 100 lot instead of a 5 lot or 10 lot or whatever ratio you want to go with it. So typically, I think there's better ways of trading than going with an option on a stock that's under $5. You could, I suppose, if you really wanted to, but let me put it this way. I would really, really, really have to like the trade for me to even consider doing something like that.
Yeah, you got to kind of want it. Mr. Meatball, I'm assuming you're in the same camp, sir. Do you ever like a little bit of options on some cheapy stocks?
You know what? I don't always hate them. I'll tell you, I used to make markets in Sun Micro when it was like $3 forever. And it can be okay, a nickel for, a $5 call just in case the underlying goes up. That way you're not sitting a bunch of money in the stock. It can be some of these names, if it's low vol and it's a big name and just happens to be low dollar, that's fine. But you're right, for the most part, a lot of times you're better off just buying the stock, especially if it's under $1.
Ah, the old days of Sun. All the post.com bust names. Now if you want to be sad, by the way, listeners, go watch that old documentary. I think it was startup.com, something like that, and it shows all these names. And the saddest part of the movie is I think the guy's on CNBC at one point, and a ticker is going underneath him as he's talking, and you could see all these .com names like Sun and everything else, hundreds of dollars and everything. It just levels, Yahoo, $600, all these ridiculous price levels. And you just look at it, and I think a little tear just runs down your cheek here because it just reminds you of the days when things were wild and crazy. And they're wild and crazy again, but in a different way. Now, all right, let's look here. Ali, that's a long one. I'm sorry, buddy. We'll get back to you. Here, Marival, lots of long ones. We like your questions, but sometimes we need more time for some of them. Let's go with this one because it's pretty easy. We'll wrap up with this one. Pretty straightforward. Denanance? Let's go with Denanance. Too many syllables in there. Tunanhance wants to know, what's the difference between realized and historical volatility? Short answer, nothing. This is two different terms effectively for the same thing. People will look at a chart of historical volatility and say that's what the market has exhibited over time. Others will say what level of volatility has the market actually realized, has it actually delivered over that time? But effectively, they are the same thing. So don't get confused by a little bit of a nomenclature going on here. Meanwhile, though, let's keep on rolling with what's lighting up the rest of our tape for the rest of the week. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, I mentioned at the top of the show, if you want a little bit of a respite from the old macro, then this week still's got some stuff for you. We had Dick's and Abercrombie and Fitch, a lot of the clothing and sporting good retailers earlier this week. Those were on Wednesday. Today, after the bell, Uber with its first ever announcement after the bell. If you want to check out all those tickers and what they're pricing in from a straddle perspective, head on over to theoptionsinsider.com. I don't think we have Uber yet. That'll be coming out soon. But Uber looking for their first ever announcement. Let's look really quick look at what the top positions are in Uber. Uber actually doing decent paper, about 200,000 contracts open right now. The number one position in Uber, and let's see, where is Uber trading right now? That would probably help. Let's see, Uber is at about $40, $39.99. Up about a dime or so today. $40, the number one position out there in Uber land, 13,000 and change of the Jan 2021 25 puts. So it looks like someone maybe with a little bit of some action around the IPO, perhaps looking to hedge a little bit. The number two are the Jan 2020 35 calls. Then number three, the Dees of this year, 40 puts. Number four, the May 43 calls, 7,700 of those. And right out the top five are the Jan 2020 40 puts with 7,700 of those bad boys. So interesting stuff going on out there. So stay tuned for Uber. That'll be an interesting one to see because, I saw a chart the other day, something like 80% of companies that IPO'd over the past year have had no earnings. Uber probably going to fall in that category yet again, but it'll be fascinating to watch how the market reacts to that. Speaking of market reaction and what people are watching for the rest of this week, let's go back around the way we just went. Let's start with the last Emperor. Sir, what are you watching for the rest of this week into the weekend?
Yeah, Uber is definitely on my list as well. I was looking at that $40 par straddle trading right now around 295, so give or take 7 some odd % expected move. I know that there was some news today. The company was announcing that maybe it's going to be making some changes in terms of who will be able to hail a cab in the near future, right? Those ratings and so forth. Who knows what's going to happen? First announcement, obviously, a very tough thing for the management of firms, generally speaking, of, how are they going to interact with the Wall Street analysts? Because there's still a lot of firms out there that don't even have coverage on this one. So would be interesting to see what happens. I'm also watching the VIX futures curve. I know that Mr. Meatball talked about it a little bit earlier. Definitely noticed the strange action in the VIX while we were actually hitting day lows there in the S&P. I also haven't really seen this flat of a curve in a long time. I mean, VIX cash right now is 17.5, and pretty much everything from June on to on through December really is flat. So which way is it going to go? In light of the S&P action, we talked about the 2,800 level being that round number that people or technicians seem to gravitate towards. Listen, it's an important level. It was an important level back in October, November, and December of 18. That was sort of the top of that box that we were trading in, and the lows were 2,600 or so. So is the price going to continue to be accepted under this level, and for how long? That's probably going to be very important to keep an eye on. And I know that financial networks yesterday were just blowing up talking about the 200-day moving average, which we are just a smidge above right now. I think that's 27.76, at least my last look. So definitely flat futures curve, flat VIX futures curve, and an interesting level from the prior year to watch. We're also going to be looking at the ISM numbers on Monday. It tends to be kind of a leading indicator from an economics perspective, and the employment situation on Friday as well next week.
Yeah, that flat futures curve has been a popular topic of conversation on Vol Views. It will be again tomorrow. We were joking last week you can almost roll from, I think it was July or maybe Sep to Dec and get paid to do it. So why not? Why not? Go for it. Since we're talking VIX futures curve, Mr. Meatball, sir, what's catching your eye?
Yeah, that curve is flat, but it seems pretty resistant to going up right now, which is kind of interesting. I said this on Twitter last night. I said, if China's looking to sell treasuries, now's the time. They've made a lot of money the last couple of weeks. I don't know why they haven't made a move yet. They could dump half their treasury position, and they would only move us back to kind of maybe where we were less 2 weeks ago. So I'm just going to go out and say it. They're not serious about selling treasuries.
You didn't just say that, sir. You did not say that on my network. How dare you?
I did. How dare I?
How dare
you
malign Chinese interest in selling treasuries on my network? Curse you. I curse the day that I met the Meatball. All right, let's move on to safer and saner things. Uncle Mike, sir, what is lighting up your tape for the rest of the week?
Well, I think that with just not much to add from what was just already said by Mark and the Emperor, but I think just the 2,800 mark is what I'm focusing on very closely, in addition to everything that was just mentioned. There's a lot of things happening, and curious to see what the month of June will bring.
The Princeps. It's always fun when he's here.
It is always nice to be joined by royalty here on the old program. And unfortunately, though, listeners, that music means we're done. We're done with our little sojourn through the world of options. I hope you enjoyed it. If you're saying to yourself, I need a little bit more Uncle Mike in my life, well, then stay tuned. We got you covered. He'll be back. If you're listening live, we'll be back in about exactly half an hour to talk about all things. I'm guessing we're going to get an update on the silver collar and all things else in the futures options world. In the meantime, you get to enjoy some breakdowns of some Costco trades, courtesy of our friends over there at Options Playbook Radio. Before we go, let's go around the horn, see what everyone else has light up their tape. Let's start once again in the land of the old hot seat, Mr. Last Emperor, sir. What is going on in the world of Fidelity options? And if people want to learn more, where should they go? What should they do?
Yeah, thank you so much for the warm host again. You guys in the audience, we're always welcoming the calls. If you're currently a Fidelity client already, give us a ring, give the service line a ring, request an appointment with this trading strategy desk. We'll be glad to speak with you. You can also, of course, go to fidelity.com/options to apply for options trading, or /coaching for some options trading coaching lessons. So don't hesitate, reach out. We're here for you.
There you go. Easy place to do it. Fidelity.com/options. That's all you have to do. It's all there for you. The rates, the tools, all the different things. And if you sign up, you can call up the Last Emperor and Trey and the rest of the crew and ask them fun questions, even when they're not on the show. Call them up. Ask for the Last Emperor. It'll blow their mind. It'll be fun. All right. And Mr. Uncle Mike, if they just can't wait for their Uncle Mike fix in a half an hour, they got to reach out to you now. Where should they go? What should they do?
stcharleswealth.com, and I'm actually going to eat lunch, so you're going to have to wait till after the show for that. So sorry, folks. But nonetheless, reach me through my website. Feel free to call me on the phone or email me in whatever way you would like. We can discuss silver collars. We can discuss collars on anything. We can discuss options. We can discuss financial planning from an option trader's perspective. It's an exciting thing.
There you go. So don't call him now. Let the man eat. But he'll be back on the show in a half an hour. Then you can call him after that. So roughly 2:30 or 2:15 or so Central Time. Give him a call and he'll answer. Meanwhile, he'll always answer the phone, whether he's at a Costco near you, whether he's at the Carmen Line World Headquarters, wherever he is. And Mr. Meatball, if they want to call you up and they want to say, hey, I want to come to your big extravaganza, are there any seats left?
Hey, yes, my big extravaganza is next week. I can maybe squeeze somebody into the VIP event, but there's plenty for the general admission. So you're going to get to meet me, get to meet Mark, get to meet Leisha, Andrew. I think Uncle Mike's even going to make a little appearance. Hey, Mark, if we get if we could get Constantine there, we could actually be the tetrarchy. You can be Diocletian, I'll be Maxium. Mike can be I don't know. Well, he can be one of the other lesser. He can be one of the.
I finally lived my dream of being Diocletian, the man who split the empire.
Diocletian.
Yeah.
Either that. I'm definitely. If things really take off this show, I am going to change my name to Constantius so that I can be Constantine's kid.
I don't know if you want to do that. Look up the history of what happened to Constantine's kid. It wasn't exactly a mutually beneficial father-son relationship. But yeah, Diocletian, the guy I always cosplay as when I go to the Roman history cons. So there you go. All right, we can talk history a lot, but we got to get rolling. Check it out, optionpit.com. Come join us this next week. It's hard to believe it's already coming up, but it is next week. If you want to come join us, meet Uncle Mike and the rest of the crew, have a delicious steak, optionpit.com/events is the place to go. And on behalf of the Meatball and Uncle Mike, who's eating lunch, he'll be back in a half an hour, and the last Emperor, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for all that fun stuff. If you're listening live, stay tuned. We got some good stuff coming for you in between shows. We keep you active here. And then we'll be back in about half an hour to talk some futures options ball. A lot going on there as well. Stay tuned. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.